On bank lending, I do think there's some timidity in making loans. I do think loan demand is down too because of uncertain economic conditions and our fiscal situation. But I do think banks are not, especially large institutions, are not as willing to lend as they probably would have been if we'd made them clean up their balance sheets. We keep repeating these mistakes. We lectured the Japanese when they did it. And then we just kind of did it here ourselves. A bank, if you leave the toxic assets on the bank's balance sheet, they're going to spend their time nursing those loans, working them down, playing it safe with government security investments or what have you. And if they do take risks, they'll probably take short-term risks in their trading book. They're not going to commit to a loan into an uncertain environment when you got all these bad loans on your balance sheet already. So I do think the capacity of the industry to lend would have been strengthened if we had cleaned up the balance sheets, and we just didn't do that. Also, I think one outcome of GlassSteagall, which perhaps should be part of the policy debate more than it is if you allow banks to have these huge trading operations as well, they don't really need to loan to make money. And if you see loan growth post-crisis, you'll see the small and mid-sized institutions have done a better job lending. And I think one of the reasons is they're not pure, that's how they make money. They got to lend, and so they don't have these big trading books, and they can't do foreign, they can't arbitrage their cheap funding here with higher rates overseas. They just don't have the capacity to do it. So if they're going to make money, they're going to have to lend. But I think the zero interest rate policies that the Fed has pursued, I don't think that encourages lending. I know it's counterintuitive. They say, well, reduce the cost of credit. Hopefully, you'll be increasing the borrower demand, but that's not there. Consumers and a lot of businesses are over-leveraged, at least the smaller ones, or they have no collateral left. And then the bank's looking at it, and the economy's uncertain. We're not sure how it's going to turn. Congress hasn't got their act together, and you're going to make a multi-year loan into this and get 4 or 5% if you're lucky. I mean, there's just not a lot of incentive to do that. So, you buy government securities, you buy maybe muni debt, maybe highly rated corporates debt. You don't go out there and lend because there's just so much risk, and the return is just so low at this point.